is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Learn to ask questions. It is always better to ask questions than to make assumptions. Have the courage to ask questions until you're as clear as you can be. Once you hear the answer to the question, you won't have to make the assumption because you'll know the truth. As long as they tell you the truth, right? Market-wise, let's take a look at it out here. We have the Dow Industrials up 135. NASDAQ is up 67. S&P's up 21. Gold contract flat, $13.37.90 an ounce. Silver down 12 cents, $16.27 an ounce. Light sweet crude down 14 cents, $63.32 a barrel. Notes and bonds. 10-year note, flat, 120.27. 30-year bond, down 5 ticks, 145.23. King dollar up, down 89 ticks, trading 89.770. The euro is what, 122.83 to 1 U.S. dollar. Yen is trading at 106.72 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? First off, we go over into the futures. What you're going to see in the futures, you're going to see a 72-point move from the lows to highs. We had a low out here today trading at 25.59. You're at 26.36. Now, bottom line is that your B point on this monster ABC down is 26.41. So bottom line is that, first off, you'd have to get on the other side of that with volume to negate that B point on the way down. If we go to the SPY, what you have with the SPY, all these ABC structures on the way down are still in place, which is pretty wild, folks. Bottom line is this. SPY's trading at 263.21. You're going up today with 84 million. You're going into 148 million. You're going into 129. Bottom line, you're going into 186. You can expect as we come into this close out here, guess what? Bottom line, volatility is going to continue inside this market. Gold contract didn't hold price. Had volume up at those highs. What that sets up is that you're going to be back topside inside the gold contract once again. Now, from this morning, we had divergence inside of the silver, well, inside the metal market in general. Silver was down all day long, including this morning when the gold contract was up. We have with silver. Silver's down 12 cents. 94,000 contracts, and silver has been the laggard in a huge way, and it's going to get a little bit dangerous for the metal market. The reason being is that is an expansion of volume coming down to the swing point. You're coming into 112,000, but 94. I don't like it coming down with that type of volume. That is an expansion of volume in the last few days. That puts game on that $16.15 inside the silver market can get tested. Notes and bonds. We take a look at the note and bond market. Note and bond market got to the 10-year note, first off, got to a price point today of 121.05, 1.3 million contracts. You're going to need more contract volume than that in order to get the higher price. Now, we are pulling back, and you're pulling back into 1.8 million contracts as well as 2.4. So it's going to be hard to break down under the 120.25 area. That's where we had some big strength on the 22nd of March in the 10-year. If we go over to the 30-year, we take a look at the 30-year. Same type of setup in the 30-year. You're pulling back 5 ticks. We didn't get to a higher high, so you're pulling back. You do have lighter volume. We're doing 269,000 contracts. That is pulling back into 347. So in both of those cases, we do have lighter volume on the pullback. That's still saying they want higher price, lower yield. The Qs, NDX 100. We take a look at the NDX 100. 3 Qs, you're up $1.60. You're trading 52 million shares. Bottom line, folks, you're going into 80 million shares. In order for the Qs, just in general, to have any type of a bounce that was going to hold, you still got to get up to 159.74. That number right there is the high of Monday. That's where you gave it up. That was 85 million shares, so we'll see how this close the next 60 minutes come in. Some of the high-volume stocks out here, and it's going to be a low-volume market once again. You get Facebook down $2.25. You get Microsoft up $1.90. Tesla is up $17.42. Let's go over to Tesla and take a look at Tesla. So Tesla, 16 million shares traded, which is pretty good. Bottom line, Tesla probably wants to make a run in this 294. That is the lows that were established out here on the 9th of February. If we go to the housing market, you take a look at the housing market. Lennar came out with numbers this morning, good numbers. Bottom line, Lennar had already tested the bottom of their consolidation, had rejected it yesterday. Lennar right now is trading up almost 10%. You're up $5.83. You have volume behind the move. And that bottom line, let's see how that's set up. Yeah, that's set up. That's going to try to get into the 67.70, and right now you're at 62.97. So there's action out here in a big way. Let's go over and we take a look at Amazon. Amazon right now is trading up at a price point of $5.95. Not much juice. Just Amazon doesn't have the juice right now. You're going into the downdraft of 12.5 million. You've done 5.4. We go over to Google. We take a look at Google. Google doesn't have the juice either. 1.9 million, you're going into 3 million. Nice bounces, there's no doubt about that. This type of bounce, folks, bottom line, fast bounces, bear market. That's how these things shake out. Fast counter trend bounces, then they give it up. And coming into the close out here today is going to be a big one, because the reality is that this was one heck of a bounce. After having a decent day out here yesterday, waking up this morning, futures, Dow futures are down $500-600. They come all the way back. That being said, guess what? We'll see how the next 60 minutes go. Inside the Dow Industrials, leaders inside the Dow Industrials go like this. United Health up 28, putting 28 positive points in. IBM 25, Home Depot 20. Taken away from it, the culprit is Boeing. Boeing down $6.95. Boeing, folks, is trying to break out its lows. The lows, Boeing did come in its high volume low of February 5th as well as February 6th out here today. Lighter volume, 317. We hit a 311. We actually broke them. Right now, you're at 323. Coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now, man, you blink and these things can really move. Dow right now is up 108. NASDAQ is up 60. S&Ps are up 19. And evidently they must have just hit something inside the Dow Industrials, because we were just up 150 points before the break. Just happened there. So, yeah, we'll find out. Let me go back to that Dow figure. It's probably Boeing, folks. So Boeing, that little baby, yeah, Boeing doesn't have to come down much in order to basically push that indice around all over the place. And Boeing, yeah, it just came down a point. That's all it was. It's down $7.48. If we stick with Boeing for a second, this is what you have. So Boeing, bottom line, you know, made a high out here, 371. That was on the 28th of February. It had the high volume low, as the market does, is at on February 5th through the February 9th. You're in that level right now. We hit that 311 today, or 323.34. Bottom line, you do have an expansion of volume. We'll see how this is going to shake out. We put this back, and you put this back on a weekly basis, and what you're going to see, it's making its way back into where it broke topside from in January. And that number is 305. And we're deep into that bar right now. So I expect 305 is going to get tagged. The real question is, if it does get tagged, is it getting tagged with volume coming into it? We go over into the futures market. What you have with the futures market? Futures market also highly volatile out here today. You have lean hogs up 2.2%. Cattle's up 2.7%. If we go to the cattle market, what you're going to see out here is that you talk about a move. This was like phenomenal. We had a low out here of $97, 97 cents rather, high of 102. And the thing that's amazing is that we almost went limit down. Limit down today inside the cattle market was 96.62 cent. We went to 97. So we missed that by 0.4 of 1 penny. Guess what? Rejected it, and then you went limit up. Then you went limit up. This baby went limit up 102.625. Monster number out there. The hogs, let's go into the hog market for a second. The lean hogs out here, let's see what this was. So limit down to limit up. Now, it didn't get close to limit down. Limit down was 70 cents, 70 and a quarter cents. Limit up was 73. What we did get is that, yeah, you get a bounce. These things are going to bounce. You know, they've been down from 85 cents. You got a nice bounce going out here. The hog market in general, oh, excuse me, folks. The hog market in general, you really want to keep your eye on, because what you have underneath this hog market is that you have a 54-cent price that very well can get tagged. Yeah, so I suspect that when we just did this was a quirk, because now we're right back up to Dow 150 up. We're just at 100. So there's something that's moving around in that Dow that's moving around really quickly, no doubt about that. Let's go take a look at the NDX 100 as to what's moving the NDX 100. Tesla is the big mover inside the NDX today. That's up 6.5%. Celgene is up 4.2%. You got Walgreen Boots up 4%, and Shire is up 3.2%. Taken away from it, you get ASLM Holdings, that is down 1.7%. JB Hunt is off 1.6%. Facebook is down 1.2%, and you got Wynn Resorts off 0.9%. If we go over to Facebook, Facebook is still having a real problem holding any type of price out here. That came down to a price point of 150.51 today, and that's the level, folks, that if Facebook breaks this level, that level there is where Facebook did break topside in July of last year. We went from a 151 right up to this almost 200 area. That's where it took off a whole nother ball game, and that's what it's been hitting, and it's been hitting it with monster volume. When we take a look at the weeklies, what you're going to see is that 151.51, 21 million shares. We hit it last week with 80 million. We've already done 29 million this week. So what you're going to have out here, you are going to have Facebook continually pushing into those lower levels, and we'll see whether bottom line that can hold. Walmart, we take a look at Walmart. Walmart can't get any traction out here. Up 58 cents. $87.38 inside the, let's go to the oil market. So come out with oil numbers out here today. High volatility in all markets. Now, this is pretty wild what we had happen with the oil market. So oil right now is trading at $63.39. API numbers come out at 10 o'clock, 10:30 this morning. And what you had is that you had the, we got up to a price point of $63.64. You're trading out at 63.37 right now. You've done 724,000 contracts. Now, and what we've done is this, is that you're going into where we had some strength on the 20th of March, and you come in with that way too much volume. So that's saying that the oil market wants to be back down to that $62 area. Let's go take a look at the XLE. XLE had caught a bid yesterday. Right now, you're trading flat, still having a hard time getting off the lows. This has been a long consolidation since the February 9th downdraft. And what the XLE has not been able to do is get out of the February 9th downdraft. If we could take a look at ExxonMobil as Chevron, they're both hanging at those levels. Chevron is a better looking equity right now than Exxon. Exxon trading $74.77. Let's see when these babies start coming out with numbers. Okay, so Exxon, the 27th of April. Chevron, let's go take a look at Chevron. Chevron is trading 114. That comes out the 27th also. Let's go into the IBB. IBB out here, up $2.82. This baby here, you are up on 2.3 million. You're going to 3.3. Let's bring this back, put this on a weekly. And what you're going to see is that the week of February 9th, the low there was 101.02. We hit that low, 100.96. Now, the real kick is going to be, let's see, we got 2 more days left here. It's 8 million. Yeah, it's going to have lighter volume. So you got into the low, number one. The real question is going to be what kind of a bounce you're going to get out of here. And what you do have with the IBB is that in June of 2017, that's where the IBB broke topside. It hit 49 million shares. When we came down in February, you came down with 29 million. Now we got 8 million, but we get 2 days left. Even if we add another 4 million in there, you get 12 million versus 29 versus 49. That's an indication that you can get a bounce going, no doubt. That's how, in fact, Lanao was set up also. Dow Industrials right now, there you go, up 192. NASDAQ is up 83. S&Ps are up 28. Come right back, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 200. NASDAQ is up 89. S&Ps are up 28. And no wonder why Facebook is not holding a price, folks. Well, it's only down $1.37, but they just came out this afternoon and posted on their website that the number was 50 million first, that the Cambridge Analytica had basically, they thought they had got information on now. That number is up to 87 million. So Facebook said the data on as many 87 million people, most of them in the United States, may have been improperly shared with research firm Cambridge Analytica. The thing that's pretty wild about that, they're basically blaming the software firm, but the bottom line, folks, is that the way that structure was at that particular point, just about any app developer could do the exact same thing. So it's pretty wild that when they turn around and they're going to lay it on them. But bottom line is that it's all about the rules that are inside Facebook, because in Facebook, of course, what you do have is that the bodies are the business. That's the real bottom line. The bodies are the business. So let's go over and take a look at Apple. Apple out here today, you had a low out here that was established at 164. Right now you're up 7 points from that level. You're at 171. And, you know, it's trying to get into, I suspect it's going to try to get into this high that was generated. Well, we get the high on Friday, which is 171.75. You have 38 million shares there. We're at 27 million. So what we are going to see out here is that this baby tomorrow and Friday, the jobs numbers Friday, it's going to try to basically get up and into that level. The real question is going to be, do you have the juice behind it? Do we have the volume behind it? The buy is going to be behind it. If we go to the small caps, we take a look at the IWM. IWM out here today, you're up $1.89, and yeah, you still get high volume lows everywhere. You're coming into 35 million, you've done 23. The thing that's intriguing about the small caps is that, you know, they have acted pretty well in this downdraft. You know, the bottom line is that they got close to the they got into the February 6th downdraft. The top of that is 150, and they made it into 147. They haven't got down yet to the 142, which was the 9th, established on the 9th out here. We go take a look at Big Blue. So IBM out here got down to a price point of 147 today. Now, the 147 did come into the highs of the high volume low, and they rejected them. So that puts game that IBM can now bounce up into the 156, and right now you're at 154.23. If we take a look at the numbers, IBM's going to be coming out with numbers on the 17th. Some of the other, let's go take a look at, you had Lennar bust topside. That puts some juice under Toll Brothers. Toll Brothers are coming out with numbers, not until May 22nd. We bring this back, put this on a longer term basis. Yeah, this is a decent setup, man. You know, Toll Brothers came into where it broke out from in October. You have lighter volume, and now that puts the highs on tap once again. You know, let me bring this back. Yeah, Toll Brothers is still trying to reach its high of 2005, which is 58. Now the difference, I believe Lennar's already blown that away. Let me just see this for a second. So Lennar, oh, it's right at it. Oh, this is cool. Okay, so Lennar took it out. Now, Lennar did take its high out with volume. So the high of 2005 in Lennar, $68.73. It got up to 72.17. Now, what you have with Lennar is this. This is where it's going to be dangerous the next time that we get up there. Lennar has a high, yeah, it's a good volume. It's not high volume, but it's a good volume shooting star. Now, these shooting stars, folks, love to get tested. And the real kicker is going to be, how does it get tested? The top of that is 72.17. We got into the bottom of that today, which is 62.44. So I expect, number one, you're going to get it tested. The real kicker is going to be, can it get up there with volume behind the move? And if that's what you get, guess what? You'll get higher price. You get up there, and if volume dies in the vine, then get out of the way. Because what that would set up, that'll set up a decent pullback. Because what shooting stars do is that they like to basically pull back off them. I've seen plenty of shooting stars. It'll pull off them for 4 or 5 months. Get back up there. If it fails, you won't see that high again for a long period of time. Lennar's set up differently because we're coming right back at it. Bottom line, 8 weeks later. So we'll see where that shakes out. The GDX, let's go take a look at some of these gold stocks. GDX out here today. Now, you had divergence inside the gold and silver market today in the U.S. dollar. What we had out here this morning was this. Gold was up good. Silver was down. The dollar was down, yet the dollar's been laying at the top of a trend, the trend it's in now, trying to go test the March 1st high. Okay, didn't get it done, but bottom that's how it's set up. The GDX, this is a nice setup. The equities are a nice setup, and this is why. GDX is trading $21.96. We pull back today, dramatically lighter volume. There's no sellers here. 15 million shares. And you're talking about 15 million shares going into 57 million. Now, what will happen is as we come into the close today, the GDX likes to put volume in. Well, it does put volume in at the close. So we'll see what type of volume we get into the close. But this is a decent setup coming into the end of the week, jobs numbers. What we have out here today, I suspect, let me see, it's the 4th. Yeah, this is the end of window dressing also. So we'll see, bottom line, there's no doubt when you take a look at money managers coming in the marketplace, where they came in, and they came in a big way. And if you take a look at this, what you're going to see, they came in at the 200-day moving average. Bottom line, we had closed underneath that on Monday. Yesterday, it closed above it. We're underneath it today. Guess what? It's saved. It's saved at this particular point. That's inside the S&Ps. And let me go look at the Dow Industrials. More than likely, they're all the same. Inside the Dow Industrials, yep, that's saved. And the NASDAQ, I don't believe, is actually even near it. Well, maybe it is. Yeah, the NASDAQ was definitely near it. It didn't touch it, though. As the what you did have is that the Dow Industrials came into it on Monday. The S&Ps came into it Monday as well as today. Let's go take a look at the some of the steel stocks. Steel stocks haven't been able to hold price out here at all. Still can't hold price. Now, it's going to be intriguing, because yesterday you had the bottom line one in the administration who was in charge of putting the infrastructure plan out. He's leaving. U.S. Steel has gone from 47 to 34, and you're not even getting any traction out here today, and you're inside the lower range. So this sets up both bottom line 32, and if you get into 32 with some volume, then good old U.S. Steel is going to have some major problems. Dow Industrials right now up 218, NASDAQ up 93, S&P's up 29. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 226. Nasdaq's up 96. S&Ps are up 30. Let's go take a look at Oracle. So, Oracle out here, folks, has a high out here of $53. Gets down to a low out here today of $44, and we bring this back, and what you're going to see something nasty when we take a look at the week of the 23rd. That's where Oracle went from 52 to 44, has juice behind the move. Right now on the monthly, that's on the weekly. The monthly, it really doesn't look that bad, because on the monthly what you have is this. That's where we actually took off. We actually broke out from $43. So bottom line, we'll see how that shakes out. Off the highs, no doubt, big problems. Now, Oracle, you are going to basically hear this in the news out here tonight. Because what you have that just come across the tape out here, you know, we know we have Trump has been going after Amazon, deals in the U.S. Postal Service, right? Well, bottom line is that that's nothing compared to the contract that's going to be coming out for the Pentagon. You know, Amazon basically had won one of the first contracts. Microsoft, Oracle, and Google start complaining, so the bottom line is that they canceled the first contract. Then what they did on top of that, though, no, is Microsoft, Oracle, and IBM. And so, but then what they did after that is that now they're going to make one contract for all of the business of the Pentagon. And what you're going to see out here tonight is that, guess what? Last night, the chief executive officer, and there's two CEOs in Amazon, Oracle. You have Mark Hurd and you have Safra Catz. Well, Safra Catz last night was dining with Trump and Thiel. The guy that started, let me see, I think he started PayPal, right? Yeah, Peter Thiel. Bottom line, they were dining at the White House, and so here, let me go through this thing. Okay, so Chief Executive Officer Safra Catz criticized the bidding process for a huge Pentagon cloud computing contract in a private dinner with President Donald Trump Tuesday night, complaining that it seemed destined for Amazon to win the contract, according to people familiar with the matter. Trump heard her out and said he wants the contract competition to be fair, but made no indication that he'd interfere in the bidding process. The people said Oracle, where Catz shares the CEO title with Mark Hurd, is competing with Amazon for the contract, a point she didn't emphasize to Trump, the people said. Bottom line is that it's going to be wild watching this whole thing shake out. And we'll see just how far the politics go versus the aspect of security, safety, all of the above. And we'll see where the rhetoric stops and the facts come to play. Let's go look at some of the higher volume stocks out here. And this will be a low volume market out here today. So Advanced Micro right now is up 23 cents. Micron Tech's up $1.46. You got Apple up $3.24. Microsoft's up $2.50. Tesla's the big one. Tesla's up 19 bucks. Let me see how the short interest that's still on Tesla. It's a monster. 22%. So basically, just about 1 out of every 4 shares of Tesla are short. And you know, bottom line is that it's been a straight line move down from 359 to 244. So there's been plenty of money made in Tesla on the short side, and it's really hard to make any type of money on the short side, folks, when you even have a short position that's basically 7-8%. Because bottom line, fast markets, you can basically it's even 1 out of 10 shares a short. You can get some downward pressure, but that's upward pressure on a continual basis also, meaning that people have to buy them back. XAU, Philadelphia Gold and Silver Index, down 25 cents. And what I expect we're going to see here is you're going to see dramatically lighter volume. And if that's what we get, this thing is setting up nice. Bottoms were established. You get higher lows that are coming in here. You do not have higher highs yet. Bottom line is that you get 5 higher lows. And the Gold Bugs Index, set up the same way. And what's crucial for the Gold Bugs Index is this. And this keeps teetering at this level. We're at 176.08. 174.19. I don't want to see it below it. And we came into 174.86 today. It's rejected it, but bottom line is that that number is a big number. One of the stronger equities out here, Royal Gold, this is really acting well. And what Royal Gold has done is this. So on February 8th, in all the metal markets, meaning gold and silver, you get a nice spike higher. That spike higher in Royal Gold is $86.46. We're at $86.55. It looks like it wants to close over it. We spiked over it yesterday and gave it up. We spiked over it Monday and held it. That's a good indication that that baby wants to get up to $90. Another one, Gold Corp. Gold Corp is actually even a better setup, and this is what Gold Corp is. The February 15th high, which is 1380, we're at 1390. Now the difference being that Gold Corp actually has a high volume high at $15.55. So your probability goes a lot higher that you're going to go up and at least test that area. If we take a look at the April 25th, that's when the numbers are going to come out on Gold Corp. So we go to Rangol Resources. Oh, this is a problem. Look at this. Okay, so let's see what happened to Rangol. Rangol's down 291. You're going after a low, and you're going after the low at volume. This is a big problem. Let me see what's going on here. Let's see. Okay, so Rangol. Well, I can't read this quick enough. Let me pull this back a little bit more. This is a problem child, though. This is one of the strongest gold stocks. Was one of the strongest gold stocks. Hasn't been for about a year now, but okay. So you're coming into. I see what it's doing. Okay, so this is coming into the highs of the low of 2016. Okay, this is going to be a big test. $75.87 is the high of that low, and we're at 79.76. So that's going to be a problem. I suspect it will get down there. Now, if you look at the inside holdings of Gold Corp, this is where, of Rangol, this is where there's always a slight problem when you have Fidelity that's either getting in or out. Fidelity's always been a large holder of Rangol Resources, and it's great when they're holding it and when they're buying it, and it's a disaster when they're selling it. Now, they're not showing that they've sold anything, but every time that these gold stocks take big hits, most times that's exactly what ends up happening. That's the bottom line. And there was a question in the den of any of the gold Africa mines at risk of nationalization. No, they're not, because, well, in fact, none of two different things end up happening. Is you want to get this law right, okay? Is that Rheingold is not in South Africa. If you remember, Mark Brisbane was the minister of all the mines when they broke them up. So he's not in South Africa at all. Second, the equities that are in South Africa, they're minority owned. So bottom line is that they're not going to get nationalized either. Stay right here, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now up 259, Nasdaq up 113, S&P's up 34. And look at this, okay? Talk about Big Brother watching, folks. Here you go. U.S. Department of Homeland Security wants to monitor hundreds of thousands of news sources around the world and compile a data list of journalists, editors, foreign correspondents, and bloggers to identify the top media influences. It's seeking a contractor to help it monitor traditional news sources as well as social media to identify any and all coverage related to the agency or a particular event, according to requests for information released last night. The data will be collected, includes publication sentiment as well as the geographical spread, top posters, languages, momentum, circulation. No value of the contract was disclosed. Services will provide media comparison tools, design rebranding tools, communication tools, the ability to identify top media influences, according to the statement. Department of Homeland Security agencies have a critical need to incorporate these functions into their programs in order to better reach federal, state, local, tribal, and private partners. They want to basically track the so check this out. They're saying there's 290,000 global news sources, including online, print, broadcast, cable, radio. Bottom line, you get the gist of it. Big Brother just keeps getting bigger every single day. No two ways about that. That's pretty intense, man. And yeah, looking at they're going to be looking at all these. You're going to be looking at all you folks in the den growling and prowling out here. Okay, so what do we got out here? So you talk about price spread, folks. Check it out. I think the S&Ps we just did. It looks to me like you almost did 100 points from low to high. We had a low out here at 25.59, 90 points. We're at 26.49. That's about as impressive as it can get. Dow Industrials, the same type of setup. Actually, the Dow would actually look bigger if we took the futures. You know, from the lows to the highs out here, we had, what, 5... Yeah, well, you had 880-point spread. Stay right there, folks. We're going to be coming back with numbers after the close. Dow Industrials up 264, NASDAQ up 116, S&P's up 35. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Create new agreements based on respect and love. Take your responsibility and make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 230, NASDAQ up 100, S&P's up 31. Big moves out here, folks. We had been down 2% pre-market out here. You end up being up up 1% in the Dow, 1.3% in the S&Ps, and 1.4% in the NASDAQ composite. Gold contract flat, $1,337 an ounce. Silver, $16.28. Let's go over to the silver market. So what gold had done, folks, gold got higher, didn't hold price, had volume behind the move, however. Silver was a different animal all day long. Silver never was positive, had gone down. We hit $16.22. You've done 95,000 contracts. Now, this is a little problem inside the metals market. The bottom of the range that we've been in is $16.15 to $16.10, and you're at $16.28. You had an expansion of volume, so your probability goes pretty high that we're actually going to come into that, and more than likely we're going to come into that level tomorrow. We have jobs numbers on Friday, which, you know, bottom line, that's going to keep volatility in the marketplace. We certainly have volatility. This is a big bounce. You had window dressing, all of the above, but bottom line, from highs to low, this is impressive. Now, when we take a look at, I'm going to go right from there to the dollar index, and this is why. When we take a look at the dollar index, what you're going to see is this. We have been at this level now for, this is the 6th trading day. On the 28th of March, we went from 88,895 to 89,920. You did that with wide price spread. We did it with volume. That setup right there is saying that, hey, guess what? That wants to test the high of March 1st. That's 90.490. That being said, you're dying on the vine up here. You know, when you get a sign of strength like this, bottom line, you normally would test it. So the first couple of days of the test, not a big deal. Volume was dying, but not a big deal. 5 days later, it's a big deal. And what we did do out here, and it's subtle, but you closed underneath it. We got to 89,570, 895, which got over the high of the strength, closed underneath it again, volume dropped off again. The way that that is set up, your probability is getting lower that we're actually going to go test this high. And if that's what we get, then we're going to be able to basically get traction going inside the metals market. You know, there's no doubt that when we do take a look at the gold contract, you know, it's had nice, you know, traction. The bottom line is that December we're at 1247, you're at 1337. You've been in this consolidation since we went topside on January 12th. Decent consolidation. If we take a look at the actual equities, the equities are set up nice. The GDX. So if we take a look at the GDX came down today, actually sideways move, down 4 cents, $21.87. Anemic volume. You're talking about 21 million shares. You're going into 37 million, you're going into 57 million, you're going into 77 million. That's how you like to see things pull back. Bottom line, that's saying that wants higher price. If we look at the XAU, we won't have the volume inside the XAU to tonight. That pulled back 38 cents, $80.84. And the gold bugs index would be the one that you really want to keep your eye on, because the gold bugs index has got into the lower level a few different times in the last month. That lower level is 174.19. We didn't hit it today, but we're right next to it at 175.46. Some of the higher volume stocks out here, and this is a low volume market out here today. If we take a look at the high volume stocks inside the S&P, what you have Micron Tech was up $1.84. Microsoft was up $2.62. Apple was up $3.22. If we do take a look at Apple, what you're going to see, pretty impressive. Apple was down this morning. Apple moved approximately 10 points, I believe. Let's take a look at this. Yeah, we moved from, we moved 8 points, 164 to 172. Lennar came out with numbers this morning, impressive numbers, big buying inside Lennar. Lennar was up almost, it was up 9%, $5.73. You had price spread, you had volume, all of the above. Lennar's trading now at $62.82. And that does give it a shot to get up into the last high that was out here, which is $72.17. If we do go take a look at Lennar and see what Lennar's been doing, Lennar's been basically building cars to get up and over its high from 2005. So that in itself was pretty impressive. There are a couple, there's one stock in particular. I think it's MDC Holdings. Is it? No, it wouldn't be MDC. Let me see. It's Oh yeah, it's NRV. This is NVR. With NVR, this equity is way over. Well, this is it's trading at $3,126. This equity here, what this equity actually had done, folks, is this: is that it bought many of the small, mid-sized home builders. And it bought those at the right time, meaning when things were downtown in a huge way. And this is, you talk about over your 2005 highs. 2005 highs was $940. This equity is out at $3,126. Monster number. And if we take a look inside of this just for a second. Yeah, you get BlackRock, well, the ETFs, they own 10% of it. Vanguard owns 9%. State Street owns 4%. Wellington, yeah, Wellington's in there with 3.5. Fidelity's in with 2.5. Fidelity's a seller, though. Stay right there, folks. We'll come right back. 877-927-6648. Had the Dow finish up 230. NASDAQ up 100. S&P's up 34. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 230, NASDAQ up 100, S&P's up 34. We take a look at the volume out here, folks. In the indice, you had 855 million in the NYSE. We take a look at the composite at 2.2 billion. We go take a look at the high flyers out here. Google first. Google up $11, so we're at 1,025. That being said, bottom line is that you're still into the bar from February 9th. February 9th, that bar goes from 1043 to 992. It's not a big deal. You know, you're up 2.4 million. You're coming into 3.4 million. Amazon also up slightly, but not a lot of juice. Amazon up $18.50. And Amazon hasn't hit the lows yet, meaning the February 6th lows, February 9th lows. That's 1265. We hit 1352 today. You go topside with 6.8 million versus 13.7 on the way down. That is one big number. There's no two ways about that. Let's go over and we take a look at XBT. Let's see what good old Bitcoin has been doing out here. So Bitcoin out here today. Trading, interesting, where are you trading? This she is. Okay, so Bitcoin is down 7%, trading $6,875. And, yeah, this basically is still going under, still going after the lows out here. Yeah, this looks like these lows are going to get hit. Okay, so the February 6th low here is 59.22, and this came barreling back into you know, last week's low. Last week's low is 65.94. We hit 67.30 today. This looks like it's going to go right after it this week. So this is going to be intriguing to see how this holds up after that high volume low down there. What you had Ethereum was down 7.7% today. Ripple was off 7%. Litecoin was down 10.9%. Now, Litecoin, you can see why it's going to be down 10.9 because what you did have with Litecoin went up 14% yesterday. Just gave it right back in about a heartbeat, though. Litecoin went to 136 yesterday. Now you're trading at 118. The low in Litecoin for the last 6 months is 109. Big volume right across all markets. We take a look at Ma Bell. So Ma Bell is still in, they're in court with basically the Justice, well, not the Justice, yeah, I guess it would be the Justice Department because it's a antitrust issue. Bottom line is that Ma Bell today up 51 cents. You're trading 35.88. Now they come out with their numbers on the 25th. 25th. And if we go over, this is pretty wild, folks. You know, I'll switch gears on you for a second because the weather in the Northeast has been like just about pretty amazing, actually. But listen to this. It looks like a spring snowfall is coming into Boston and New York coming this Saturday. This is crazy. Okay, so here you go. So whether Washington, D.C., New York, and Boston get a white April depends on the path and timing of a cold front that is forecast to dump snow from Missouri to Kentucky before heading into the Atlantic, says the Weather Prediction Center in College Park. A low-pressure system is expected to build along the front, move up the coast. Snow falling during the day in April is hard to stick, even on grassy surfaces, but it's pretty much a wintry pattern across northern and eastern portions of the United States. This is wild, man. Before winter takes another bite this week in a cold front that unleashed winds Tuesday across the south, ripped down, holy cow, ripped down power lines, toppled trees, and even damaged aircraft and hangars at Houston's Hobby Airport. It's bearing down on the northeast. New York may get, look at this, New York is expected to get winds of 55 miles an hour and sustained winds of 25 miles an hour tonight, up until midnight. That, folks, now we're in April. We started getting in May, and we still keep getting snow up in the Northeast. Whether bottom line, you know, disappears immediately, that is a problem in paradise. There's no two ways about that. Let's go take a look at the chip market, NVIDIA. So NVIDIA, NVIDIA started the downdraft in November. Bottom line, that's when NVIDIA had gone from a price point of $217 flat down to 180, and that was in all of 7 days. It shakes that off in a big way, goes all the way back up to 249. So when it went up 60 or 70 points, comes down hard to 204, and has been consolidating up at these highs. Now, what NVIDIA did out here today, it rejected lower price. You're into the monster downdraft. So NVIDIA still has to get up into this price point of 235 in order to do anything. And, you know, we'll see whether they can do it. It's not going to need a lot of volume, right? We did 19 million today. So the bottom line is that, you know, it basically has a shot to at least do that. We'll see whether we can get any follow-through and if, in fact, it can get up into that area. If we go to the SMHs also confirmed ABC structure in the way down. It hasn't finished the ABC structure down yet. And what you do have with the SMHs is that you've gone up with dramatically lighter volume, 5.8 million versus the 10 million on the way down. Your B point on this, which is 104.09. And I suspect that's going to get at least tested. We'll see how that shakes out tomorrow. Intel, let's go take a look at Intel. Intel today up 24 cents. You're at 49.99. That can go test its high. $51.36. Netflix, NFLX. See where Netflix is heading here. Netflix is up $5 today. Netflix has a problem though. This came down off the high. Get some real juice. Put this on a weekly. Yeah, this came off the high with volume, but we can test the 300 area. Bottom line, though, still has some problems out there. Boeing had a big problem, of course. China came out with the 25% tariffs. That would hit them like a brick, because the bottom line is that the Chinese market, folks, will be the largest market in about 2 years in the world. It's one of Boeing's biggest markets. They're fighting like wildfire between Boeing and Airbus for that market on a continual basis. And 25% tariffs, bottom line, big numbers. The average plane that they're talking about is $100 million. So picture that, 125. What Boeing did out here today is this. It got to $311. Expansion of volume, 8.2 million. Saved itself on price. You're going to be right back down there at that 317. And right now, we're at 327.44. Stay right there, folks. Come right back. Dow Industrials finished up 230. NASDAQ up 100. S&P's up 33. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go over and take a look at some of these marijuana stocks up in Canada. So you get the largest marijuana, legal marijuana equity there is Canopy Growth, folks. So Canopy, and you take a look at this acceleration, pretty amazing, actually. We go back to 2016, stocks trading at $9 to $16. That was on a breakout. You can actually go back to 2016, the beginning of 2016 is $2.92. That being said, let me bring this up on this side so you can see how this is shaking out. So in 2016, when this thing started at $2, it had revenue of, it had just started, basically. It had revenue of $12.7 million. It was doing about $3 million a quarter. It consolidates from November of 2016 going all the way over to November of 2017. And then what you had at that particular point, now this is strictly a medical marijuana company. In fact, they will not come into the United States at all, which was pretty impressive, actually, when Session came out and bottom line said he didn't know whether he was going to go after the states or not. Bottom line is that as a public company, I think it was a really smart deal what they did. Stay away, period. Because guess what? You don't need the United States to turn around and make billions of dollars in the legal weed business. So what you have is this. November goes from $17, consolidates to 17, breaks topside. We have a high volume high at $44. Now, don't buy this thing yet. I've been waiting for this thing to pull back for a long period of time. The high volume high is January of this year. You come off the high, and your first leg down had pretty good volume. You know, you basically hit a price point of $20.85, and on a weekly basis, you did $64 million. Now, watch how this goes. $64 million, right? That was the week of February 9th. We go higher with $46 million, and then higher with 27. Gives it up. Now what we have, we're barreling back downtown again with volume. So number one, I expect that low is going to get hit of $20. Now, depending on how that low gets hit, you know, if it rejects it with lower price, okay, that may be the buy. What I'd love to see this thing do is actually go back to its breakout area, because this reminds me of the first move in 2001 and 2002 inside the gold market. When gold had the the whole commodity complex had a super bull market that started in 2001. When that first started, folks, what you had is this. You had an unbelievable expansion topside. Then what you had a vicious pullback. The pullback would be really sweet at $13.65, because that's where it broke out from November of 2017. And what you have, so this is lining up, not only technically, but it's lining up fundamentally, because what you're going to have happening is that you're going to have the aspect that cannabis is going to be legal in Canada recreationally in July. July to August is going to be recreationally legal. This particular equity here, right here, when you take a look at the ownership value, and this is important when you start putting this together, is that Constellation Brands, okay, bottom line, came in, they bought 9.5% of it. So you get one of the largest liquor companies out there that in itself is quite an operator. And they come in, and of course they come in, well, my take is that they come in because they know that the bottom line is that marijuana is going to basically, you know, give liquor a run for their money. That's the bottom line. They're in the, whether it's the entertainment business, you know, the liquor business, the whatever type of business you're going to call this. Bottom line is that you're going to see the biggest amount of money when these things get legal are going to consolidate, and they're going to consolidate really quickly. You know, so if you're looking at any of these equities, let me see, STZ. Let me just show you something here. So if I go into STZ, okay, so now you go into Constellation Brands if you want to see what kind of operator they are. So alcoholic beverages everywhere. North America, Europe, Australia, New Zealand. If you start looking at their growth, the numbers, what you're going to see is that 2014, they do $4.9 billion. 2018, 7.6. Now, this here is actually a small liquor company. The key is, when you're looking at it, it's the first liquor company that actually got into the legal pot market. That being said, when you take a look at this chart, they're doing something right. Because this chart, folks, I was looking at this chart, you know, a few months ago, it's like, this is about as intense as you get. I mean, the markets have been up dramatically, but this is what you have. Constellation Brands, in June of 2012, was trading at $18.50. It's trading $226. One-way deal. Not only that, what you have is that you actually have volume at the high of 229. So we'll see where this whole thing shakes out. But if you are looking at some of those, and just bide your time. Let me pull it. I'll pull this up again. So I'll pull up a few others. Because what you're going to see is that they're back pretty good this year. You got Aurora Cannabis. So ACB. Let me pull this one up. ACBCN. ACB. So this one is just about as big as Canopy. They're doing, yeah, they went from 1.4 million in 2016. They say they're going to do 64 million this year. Now, what they're expecting, this is going to be interesting to see if they can come up with this number, because they are saying that they're going to do a jump from 11 million a quarter to 20 million a quarter this coming quarter. Let me see when they're coming out with numbers. They're coming out with numbers May 15th. That's quite a jump. You know, we'll see whether that shakes out. I'm not quite sure how they're going to do something like that. Now, this equity is down 50% from its highs. Also, this is cool. So the same high volume low that I was talking about that I'm looking for Canopy to go to, this equity is actually here right now. Now, this is where you can get a nice heads up. Because if this can't get out of here, if it can't get out of the $7 mark, this thing will go back to $3.21. And if that's what we get, folks, let me tell you something. Hang on for the ride. Because what you have with these is that you have buys that came in. You have high volume highs up at the January, as well as the 2 weeks in January. You get high volume highs up here. Bottom line, one of the tigers are telling me that they expect big exports. I don't know how you... I know that weed owns different companies overseas because there's plenty of European not plenty. There's plenty of there's plenty of European countries that do have medical marijuana. I know. We'll find out how that exportation works. Stay right there, folks. Come right back. Dow finished up 230. Nasdaq up 100. S&P's up 34. Coming right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timers Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We go over and we take a look at Spotify. So Spotify yesterday, folks, went public in a different way. It wasn't an IPO. Bottom line is that we'll see where this shakes out in the next few days. But yesterday, when it started trading at a price point of $165.90, and the top tick out here. Bottom line is, that was the top tick thus far. Yesterday it traded from 169, closed out at 149. Today it opens at 148, trades to 140. Well, it actually trades to 135, closes out at 144.22. So there's still price discovery inside Spotify. There's no doubt about that. So they provide streaming music services, commercial-free, ad-supported services to subscribers. They do have a huge amount of subscribers. I believe it was like 71 million subscribers. And I guess, so Sony Corporation is going to gain $1 billion from its stake in Spotify. That's pretty cool. The sum reflects the proceeds from the sale of Spotify stock Tuesday. They sold on Tuesday when the streaming service went public, as well as the higher value of Sony's remaining stake in the company following its listing. According to the regulatory filing, Sony sold 17% of its holdings yesterday. Spotify's market delivered a windfall for the music companies that acquired several stakes several years ago. Sony, of course, which is the second largest record label and largest music producer, owned 5.7% of the company. So they sold the 17% of it. That means that they're still owning plenty of it. Okay, so Sony's music and the Orchid are committed to, let's see, it's Orchid. Orchid is the subsidiary that actually owns the shares, sharing their artist and distributed labels with any net gain that they make. Oh, this is interesting. So some artists have criticized the Stockholm-based Spotify and the labels for not sharing enough in the proceeds. Tokyo-based Sony and its Orchid subsidiary have said that they would, and will, rather. Sony Music and Orchid are committed to sharing with the artists and distributed labels any net gain that they may realize from the sale of Sony Music equity stake in Spotify. The company said this is consistent with our previously announced policy. Well, that would be really interesting if that's the case. Let's go over to one of the tigers that give me a heads up inside the den here for a real estate play inside the cannabis business. Okay, so this is IIPR. Innovated Industrial Proper. They own and lease industrial real estate assets. The company focuses on acquisition, disposition, construction, development, management of industrial facilities leased to tenants in the regulated medical marijuana business. Okay, so they're in San Diego. Let's see this thing. That's a small company, though. So they have $15 million in sales. You have a market cap of $204 million. I don't know about this. Let me take a look at this thing. Okay, so yeah, I would be leery of this right now. There's no doubt. Now this thing took off. You know, you go from $18 in December, you go up to 36. But let me go back at these numbers again. $15 million is nothing in the real estate market for rents. So thus far, yeah, see, it's going to be hard to grow that. Next year they're saying they're going to do $23 million. Would you really pay? Well, here, right now. So picture right now. Right now, they're taking $2.3 million the last quarter. So if you're taking $2.3 million and you have a market cap that is $200 million, that doesn't make a lot of sense to me. But guess what? That business is going to be big. What has happened is this. This is what is really wild. If you happen to be in any city, or even, let's say, you don't have to be in the city, just outside the city, warehouse space, folks, is worth a fortune. That is what's happening, and that is happening in every major city, which is really cool. And there's a lot of different reasons. It doesn't even have to do with the pot business. That has to do with we're buying everything off the internet. And it's not just Amazon. What has happened is that there's huge amount of companies that need warehouse space because it's the delivery for the last mile. That's what's going on there. So keep your eye on that, because there's still plenty of cities that have warehouses that basically aren't worth a lot of money. The cool thing about a warehouse is that it doesn't take a lot of money for the upkeep of a warehouse. You know, most warehouses, they have good steel barriers on them. They get aluminum on the outside. You get cement floors. Bottom line, you're not dealing with walls. You get, depending with where you are, whether it's an air-conditioned system or a heating system, you know, that'll cost you some bread in the roof. Make sure the roof's all right. But warehouses in general, big dollars, and I don't think that's going to change either. And that has to do basically with the internet. And then on top of that, it has to do with if you're out in the Colorado area, or the California area, it's a monster. UPS, let's go take a look at United Parcels. So United Parcels, huge problem. United Parcels, one-way trip on the way down, February 9th, 103. You're at 106 right now. That being said, yeah, you get a bounce going, but it looks to me like either United Parcel is not upgrading as fast as Federal Express is, because this is really unusual. Both of these stocks used to track basically pretty much the same. And what you have right now is that United Parcel is trading where it was trading in November of 2013. And if we go take a look at FedEx, we bring FedEx up. You know, FedEx is down from a high of 270, but I don't believe it's that back that. Yeah, it's not even close. FedEx is only back 4 months from January. If we went there, November, did I say let me pull this up again, because this is a huge differential inside the business, and we'll see what the problem is. This will eventually come out. Yeah, November. Oh, this is in November of 2013. So look at the difference. So FedEx is the 238, and if that was going back to where UPS would be trading, FedEx would be at $113. That's about as dramatic as you can get. So FedEx is absolutely doing something right versus UPS. And I suspect we'll find that out in the next few earnings releases out here. You get FedEx that's doing, UPS plans on doing $70 billion this year, $16.5 billion a quarter. And if we go take a look at FedEx, FedEx right now is looking to do same deal. So FedEx, so they're doing the same amount of traffic per quarter. Evidently, FedEx is bringing a lot more to the bottom line. Pretty amazing. Stay right there, folks. Coming right back. Dow Industrials. Highs to lows, monster move out here today, folks. Dow is down 500. It closed up 230. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, if you'd like to test drive my gold report for 30 days, easiest way to do that, come over to our website at TFNN. You're going to go to newsletters. You go to investment newsletters. You can test drive that 30 days absolutely free. Let's go over and take a look at the UK. So the FTSE in London, the DAX in Germany, bottom line, they are under the February swing lows, and you're talking about under them dramatically. We're it's 7,034. Well, actually, we're right at them. The low was 7,079. You broke them decisively, haven't been able to move yet. That is a heads up, folks. Number one, that the volatility is going to continue on our marketplace. Number two, that we're going to head into those levels. And number three, the real question is going to be, as we get into those levels, are they going to basically get below those levels? If we take a look at the DAX in Germany, DAX in Germany is trading 11,957. Now that has to get up about 300 points in order to get above those levels. So DAX in Germany has been underneath them for quite a while. When we take a look at this and we pull this back a bit, you know, bottom line is that what you're going to see is that the DAX got back inside its lower range. So the DAX has a shot to go down to 10,000, and that had made a high of 13,500. If we take a look at the FTSE as a break-even aspect, you go back even a little bit further. The FTSE is trading about the April of 2015. You are higher than that April of 2015. You're right at this kind of level, June of 2014. You know, so this is going to be a monster level. What you do have inside the UK is that you have to get 100 points higher in order to get back in the higher range. And if you don't get back in the higher range, keep your eye on these markets, folks, because the DAX, as well as the FTSE, they're set up like our Dow. Bottom line, we haven't had a correction in years. Bottom line, we're right in the middle of one right now. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership, and fly with it. Everything you need is right inside you, folks. Have a blast with it. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Look at them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.